Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, on April 2nd, the ECB will be doing their thing, and they're expected to lower rates from the 1.5. Now, what will happen on April 29th when the Fed goes? Well, the Fed's got a lot of tools available to it, but they've pretty well exhausted most of their tools for lowering the rate. I don't know exactly what the current rate is, but at the last Fed meeting, you could see that Ben Bernanke had pretty much gone into the extra inning for other tools to make money more available. I think right now everybody's priority, from the President of the United States to the Chairman of the Fed, is the economic outlook is more important. We got to keep the money flowing, and right now there's a bottleneck in the U.S., and so what they're doing is throwing everything against it, trying to get this economy up and moving. And I think if, and I got a news presentation, maybe you could send an email in to DTI. I'll tell you what, send it to cash@DTI Trader, and we've got a video talking about news and how news is changing and how that's affecting, and that's something you could watch later on. But send an email requesting the news video. We saw a major turn in expectations versus actuality at start of March, and I think everybody can recognize that the stock market came off those lows and started to rally, but it was telegraphed by that news. Well, if you were told the following: hey folks, we can't, our people out there can't get loans, what would a government do? They would try to come up with ways to make loans more obtainable. I know over here in the U.S. we've had a lot of problems with things as small as student loans. Students couldn't get loans to go to college. You couldn't get car loans. I mean, it's been really a mess. Retail loans, now businesses have been affected. Their credit lines have been cut. A lot of things have sucked out the elasticity of the U.S. economy. And what does that do? The economic engine is slowed, and that will drive the U.S. dollar lower. That's why the concern of the FOMC is about the economy and get it moving. All you hear is talk about ways to get the economy moving. You don't hear people talking about inflation and the effect of their actions on inflation. So write that one down. We're not there yet, but you will see it. You know, when I think about trading and I think about some of the ways to make money, I know that there's a lot of different ways to make money. But one fundamental way I believe that you got to think about, not only from today, next week, next month, is there is a major trend of a weaker dollar and a stronger euro. So how could you make money is the question you want to ask yourself. Well, there's a lot of ways you can do that, and you can do it through the ISE, through some of the strategies of using the EUI, and I think that that is one way that you can make money. I believe that the trend of the market is pretty set, and you might have some bounces here and there, but the truth of the matter is the trend is in place, and that's not going to change. That will not change until we get the economy moving and you see that things are better economically, and you'll know that by watching the fundamental news that's delivered on a weekly basis by the U.S. government. All right, let me. They're saying right here. It says, yeah, April 28th is the next Fed meeting. Thank you, Mike. It's next Fed meeting. We always open that up for new people. They can go to our website, www.dtitrader.com. I think I think that is something you ought to watch at least one time. That cash at DTI Trader, we got some videos of other Fed meetings that we've done live trading in. I think it'd be interesting if you want to get a copy of one or two of those to look at. All right, let me look at some of the questions here. I'm having to reach and to see it. It's pretty small writing, but let's see. Here's a question from Joe. Whenever I look at FX options, I notice little or no daily volume. I'm used to equity options where hundreds of contracts trade. Yes, it does affect liquidity, and that's the nice thing about the ISE. They make a market in this, and they keep the liquidity in the market. So that's one of the good things about using these ISE options. Let me ask you a question, and this is a question I got for you. If you are sitting there, and let's say you live in Europe, okay? Say you live in Europe, and you're totally invested in a euro currency. Wouldn't it make sense to watch the U.S. market and the U.S. dollar for when maybe you would deploy your euros in your own market or either in our market by watching that currency spread? I know years ago we used to do a nice trade because a lot of these governments issue bonds, and these bonds can be played with interest rates, and it got my attention when they were talking about the Australian market. You know, Australia has some good bonds that you might want to check into, and it might be a good currency play at the same time. So there's some strategies that can come out of that. Let me take some more questions. Okay, here's a question from Sam. I was looking at U.S. dollar in comparison to a basket of funds, and it's still much lower than a year ago. I would guess that U.S. dollar will continue up. Can you comment? No, I don't think it will continue up. I think the U.S. dollar has had a minor bounce, you know, and I think what you're going to see is that the U.S. dollar will weaken and get worse. I know that some of our sister currencies, and I talk about the Canadian dollar and other things, you know, they've been pretty well weakened also. But the easiest play is probably the euro because you are going to see higher prices there. Okay, here's a question for a starting trader with capital in euros who wants to trade the U.S. market. What hedging method would you suggest? Well, that's a great question because, you know, if you're invested in the U.S. dollar, you're going to be invested in the U.S. currency. So what you want to do is offset that, basically playing the EUI to go down because that would offset your losses you had in currencies. It wouldn't do you any good to make 10,000 U.S. dollars and saw the currency evaporate on you when you made the conversion back. I think that you know, the U.S. economy is, you know, still the world's largest, but you know, we're going to have some tough times, and but I think that if you're just looking at it, I think there's some opportunities over here. I know that, and I want to comment on the U.S. market in my opinion, because I did a radio show this morning, and I was asked a question. Hey, Tom, I know you got negative on the U.S. stock market in October of '07. Have you had any change? And I think he was shocked when, yes, I have had a change. As of March the 6th, I have actually turned bullish on the U.S. market, and I'm using an S&P reading of 666 that tells me I'm wrong. And I said, as long as I can know where I'm wrong, I don't mind playing the U.S. market long. You know, I've been short that market and shorting it all the way down, and now I've made a fundamental change, and I actually have some stocks in my portfolio for the first time in about a year and a half. And so I have changed in the last 3 weeks, and I believe we're going to see higher prices here in the U.S. in the stock market.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.